Had with Alexis Nasard, the global CEO of Bata. Shireen began by asking him about Bata's expansion plans in India and where India stands in Bata's larger global scheme of things.
Our purpose, first of all, is to delight our consumer. And our consumer is called Angela, and we have a very clear view about the kind of consumer we're after. By delighting the consumer, we hope to continue growing in a profitable way. And for us, market share is a gauge of our progress and our ability to delight consumers, but it's not an end objective in itself.
But if I could ask you what this confidence translates into numbers, if I look at your FY17 revenue, up 2% at 2,504 crores, or about 370 million, margins at about 11.1%, and profitability has actually come down. You're at 159 crores for FY17. So what is your bullishness and confidence in the Indian market translating into numbers?
Well, in 2016, we closed with net profit up 15%, to be very clear. Our turnover needs to grow a little bit faster. That is definitely the case, and we've put in a lot of measures in place for that to happen. And on a year-to-date, I can divulge the precise numbers to you at this stage, but at year-to-date basis, our retail turnover is up very significantly versus last year.
So what are going to be the levers that you exercise to ensure that your turnover grows faster than you've expected or you've currently seen? I mean, in terms of store growth, what is it that you're anticipating? You have about 1,500 stores in India today. Where do you see that number?
You have what I call the retail levers. So we're going to open a great amount of stores. In 2017, we'll open more than 100 stores.
Okay.
And more importantly, we're going to start introducing new store concepts.
Okay.
New store concepts which are more modern, more aspirational, and do a better service for our collections. And we also want to service, part of our strategy is servicing our consumer wherever she chooses to shop. Whether it is in a mall, in a high street store, or online. And that is why we are developing our e-commerce capability quite significantly at this stage, in order to meet her needs and his needs wherever they choose to shop.
So how important is India for you as far as your global strategy is concerned? What does it contribute in terms of global revenues, for instance?
I cannot tell you the percentage of global revenue.
I was hoping that you would.
But I can assure you of one thing, Shireen, it's not negligible.
Okay, it's not negligible. That could mean anything. That could mean anything. So is it in your top 5 markets?
Definitely.
It is in your top. It is in your top 3 markets?
I'll leave it there.
Okay.
It's in our top 5 markets, but also, India is an important proxy of our ability to win in large emerging markets, which are increasingly open to competition, hence competitive. So if we're not able to win in a market like India, it would be concerning for our ability to grow globally as a company, because emerging markets are a significant part of our growth agenda in the future. I mean, Asia is going to represent 2/3 of our turnover growth in the next 5 years, and India will play an important part in it. So for us, it's not only numerical, but it is also a strategic proxy. And last but not least, it's sentimental. We've been here since 1931.
Yes, yes, absolutely. But if I could tie you down to the numerical, you
again.
Again, this is CNBC. So you had a target of about $1 billion in India. I think that target was set a few years ago, and you were hoping to get them maybe in the next few years. So does that stand? Has it been pushed forward? So by when? $1 billion by when?
It absolutely stands. We want to get to $1 billion in the next 4 to 5 years. We're very committed to that. We deserve to get that kind of number, and I think the dynamics of the market, based on what we already know of our strategy, because our new strategy has been around for only 1 year, so it would be pretentious to draw too large conclusions behind it, but the early signs are promising and show that $1 billion could be achieved in India.
You're absolutely confident about that?
I'm not absolutely comfortable. I'm reasonably confident.
You're reasonably confident. One of the other
Absolute confidence is dangerous.
True. But one of the other big triggers that you probably are waiting to hear from the government on is the GST rate on footwear. A lot of representations being made by the footwear industry saying that it should be at about 12%, and that would be appropriate. How significant if it is higher than 12%, for instance, if it's 18% or maybe 28%, what kind of impact will it have on your business?
I wouldn't want to surprise you, but we do agree that it should be 12% and not 18%. And if it is higher, we're going to find a way to cope. But the bigger point that I'd like to make from our neck of the woods, which is what we chatted about before we started the formal interview, it's important that the government of India continues its good policies, and we respect them a lot, but electroshock initiatives which come at a regular pace in the countries are not helpful for industry and for investment.
You're talking about demonetization?
Yes, and I don't want to debate its merits or its non-merits. It was done, and I'm sure there were good reasons to do it. But we cannot move to a policy where you have electroshocks every quarter.
Okay, that's Bata, but the other